All right, welcome everyone. Welcome to another market wrap. I have with me Mr. Pankaj Pandey, and this was a very strange week, which definitely needs to be decoded. I think a different kind of volatility we saw from last Friday, I think last Thursday, and then this week itself. Friday was very interesting with markets going from 300 points down to 220 points up in a one single day, one single session. What is going on in the market, sir, and where are we looking forward to?
Hi, good evening, Vishu. Yes, so this was a quiet week if you look at till Thursday. And Friday is when the sort of action happened, and largely our senses is more to do with the Sensex expiry, which happened on Friday. And as a result, we have seen a very sharp move in the market. And overall, markets have sort of recovered the lost ground for this entire week and have settled marginally higher. And this is on an expectation that the Fed rate cut will happen. And in this process, the small caps have made a new high. So I think volatility on the expiry day is something which is coming back. So I'm not surprised, and possibly in future also, as and when the expiries will be there, we would see a volatility. But having said that, the broader message is that the market is holding to those last week lows of 24,000. So that becomes a good support. And which is why I feel that going forward, the setup looks good because your 50% of the index is doing well, especially IT is doing well for the second consecutive week. Bank has been sort of doing well. So if your 50% of the Nifty has been doing well, so our sense is that Nifty could be heading higher to levels like say 25,200. And broader market continues to do well. And in fact, we feel that Nifty 500 is going to relatively outperform compared to Nifty 100 given that it's a 6 month breakout. So from that perspective, even the broader market looks quite good. And I think next week you'll have some event, so you'll have Fed meet outcome, which will be there. And then dollar again has been sort of appreciating. So one needs to see beyond 108, is it really sort of getting resisted there? But in general, IT plus BFSI definitely looks good. And then I think if we see some announcement on the overall capex side, then capital goods and infra or defense will remain in the limelight.
Right. I think we also saw inflation numbers coming out. What's the roundup there?
So I think October inflation at 6.2 looked scary to a lot of people. So from that perspective, 5.5% kind of inflation for November reading was quite unexpected lines. But I think, like we have been saying earlier, also we need to sort of strip out the food component of it because if you sort of strip out the food component of it, then the core inflation is flat at about 3.7%. Because see, in the month of October, it is the food inflation which was at about 11%, which took the inflation higher to 6.2%, and that has sort of cooled off a bit, and which is why the inflation has sort of come down. And I think food is definitely going to remain volatile depending on festive season or depending on how the monsoon sort of pans out. So from that perspective, I think inflation, according to us, is more to do with the volatility what we see in food. And I think since the core inflation is largely remain intact, so I think this brightens up the prospect for a rate cut in the month of Feb. So we're keeping our fingers crossed. Let's see if the new governor does walk in that direction.
Right. I think mutual fund numbers were pretty good as well. They've been as they've come out for November.
Oh yes, I think when you look at the narrative is more like that month on month we have seen a dip. But I think when needs to sort of look at you have a festive season and then uh, uh, despite all of this, the overall net inflows are pretty strong at 36,000 odd crores. While October was very good at say 42,000 odd crore. But I think net, I think these are pretty still strong and stable set of numbers. And I think when you look at large cap wise or mid cap or small cap wise, I think numbers have been quite okay. So I think large cap, it's been largely less. So from 3,500 crore, we've got about 2,500 crores. But mid cap and small caps have largely remained intact. So mid cap at 4,900 crores from versus 4,700 crores, and small cap at 3,700 odd crores. So large caps have not been a very preferred category, at least off late by investors. because the theme has been more of or the thematic funds have largely been sort of garnering more of inflows. And in fact, last 1 year, out of this 86,000 crore kind of money raised through NFOs, 72,000 crores have gone into thematic funds. So obviously, base had to sort of catch up with these thematic funds, and which is why the net inflows are less. But otherwise, if you look at even SIP flows are pretty stable at 25,300. So from that perspective, I think inflows are pretty stable. And if you sort of annualize these kind of numbers, say 25,000 kind of a run rate or slightly more, I mean, you're clearly looking at an inflow of 3 to 3.5 lakh crore, which is quite massive and quite large compared to what you see the kind of selling from the FIs. So I think this is one of the core drivers of liquidity, and I think that is largely remaining intact. So it's definitely a pleasing news.
Absolutely, sir. I think one more question that has been on everybody's mind is what's up with IT, because they are up everywhere. Even I think last week when markets were going all flat, we saw IT just did not stop. So, what is the reason behind this massive rally?
So yes, so IT overall in the last 1 month, the IT index is about 8 odd %. And we have seen this week IT also sort of doing well. Prior to this week, IT was doing well. So one obvious reason cited of late is that see the dollar is getting stronger and rupee sort of declining, and which is why it is benefiting IT. But I think we would want to sort of disagree with that viewpoint, because see, rupee has dropped only 1.5% in the last 3 months, so it's not a big depreciation. And also, one needs to look at the texture or the revenue composition of the IT companies are also changing. So while 60% of their overall revenues are still coming from US, but within that, if you look at what we are clearly seeing is that the big ones, like say for example, TCS is now getting only 49% of their revenues from in US dollars. This is down from say 51%, which used to happen in March. Similarly, Infosys dollar revenues are down from say 58 or 59% to nearly 57.5. That is because of the fact that they are pushing or they're doing geographical diversification. So they're getting more revenues from the Euro or UK. And in fact, Indian rupee has been sort of appreciating in some of these currencies. So, for example, it has appreciated by 4.2 odd %. And similarly, compared to pound, it has appreciated by about 0.9%. So from that perspective, currency is definitely not a factor which is playing in the overall run up in IT, what we're seeing. So our best guess is that US elections are over, and there is a potential for late tax cut to happen there. And it is also coinciding with the IT companies' clients' cost planning. So that is leading to a better outlook for IT companies, because what is expected is that this year they will be growing at, say, their revenues in single digit. But there's a full possibility that they would be growing their revenues in low double digits in FY26, and which is why IT has been sort of doing well. That is what our take on the overall IT sector outperformance.
Right, perfect. I think another sector which was in the news a lot was defense. I think there was a series of orders that came in. So, what are some of the key takeaways for us in this?
Oh yes, this space is always interesting. So one, I think was an order for about 12 Sukhois given to HAL, and this was largely to do with the fact that some of the Sukhois had sort of crashed, so it is a replacement demand. But nevertheless, it's still a significant number, and what it does to HAL is that it increases their order book to about 1,30,000 odd crores, so roughly 4 times their overall current revenue. And it not only benefits the other players, so besides HAL, it also benefits Bharat Electronics, Astra Microwave, and Data Patterns. So, for example, Bharat Dynamics usually supplies Astra air-to-air missile or Nirbhay missiles, or Midhani, which is what we've been liking, also supplies critical materials and alloys to for the AL-31 engines, which goes into making Sukhoi. And this was not the only thing. In fact, when you look at, there was an announcement on the artillery gun side. Now, our sense is that see, the government had already given an approval for 307 advanced artillery guns. So these are basically these are lighter guns. So orders are expected for this, and the current announcement of say 7,000 or crore is for a heavier gun. So orders are expected in subsequent to this order. So from that perspective, this is another pipeline which is getting created in terms of artillery guns. You're seeing sustainability, both heavier and the lighter guns. And if this was not enough, I think what you're clearly seeing is that German shipbuilding company, which is a big player, Thyssen Group, is proposing a JV for submarine and warship building with Masgau Dock. Now, this can be a potentially big thing because, one is costing side, we are definitely a lot more cheaper. It is estimated that we are cheaper by 50%. And since there is a global shortage and we can sort of build ships at a cheaper price, I think not only MDL would be catering to the domestic requirement, but I think the global opportunity also opens up. So I think this is definitely positive. Let's see how the developments sort of take place. But defense is, yes, coming back to life, and we're liking this space. Stocks have run up, but still our top picks would be HAL, then Bharat Electronics, Astra Microwave, and Medani with a target price of 430.
Great, sir. Uh, Also, in news is banking for its deceleration in the credit growth. I think it's fallen to about 10.5% from 16% earlier. So, how concerned should we be about this?
Well, yes, so credit growth was 16% in March 2024, and now it is down to about 10.6 odd percent. It depends on which perspective you look at. So, for example, when you look at what is clearly happening is that there is an alignment of growth, credit growth is happening along with the deposit growth. So your CD ratio becomes comfortable at 80 odd percent. But yes, it gives pressure on the, or it puts pressure on the margins. And which is why banks are selectively sort of hiking some of the tenures for, say, MCLR. But I think broader picture is that the overall growth has definitely come down, and partly also because of the regulatory impact. Because see, RBI has been clearly sort of increasing the risk weight on exposure to NBFCs. Bank lending to NBFCs has sort of come down. Then there is advisory from the RBI to sort of slow down the personal loan or credit cards. So, which is where I think the unsecured segment or leg is sort of witnessing a slower growth. So I think it's a combination of all these things which is leading to slower growth. A good part is that I think with a rate cut anticipated, I think things could become better. So we are already seeing one extreme of all these, and I think things are going to get incrementally better, and which is why I think even the banking, as I say, indexes started to sort of do well.
Right, sir. Talking about banks, I think Bajaj Finance has just come up with its strategy 3.0. So, what is all that about?
Well, yes. So Bajaj has unveiled a strategy 3.0 for the next 5 years. So they're talking of number of things. One is increasing the credit market share, say from 2.1% to 3.5% by 2029. They're literally looking to sort of double their customer acquisition, so from 9.2 crore to literally 19 to 20 odd crores, and looking to sort of double the cross sell. And on top of it, they're looking to maintain a ROE of 20 odd percent, and it's currently about 19.5, so largely similar. So I think overall, see from the number perspective, it does not really excite the market much, or it does not really excite us to sort of pitch in for an upgrade, because when you are already trading at such a rich multiples, I think better growth is obviously expected. I think any positive surprise from here on in terms of growth, that is where I think potentially the stock can sort of do well. Otherwise, with this kind of a growth rate, I don't think stock becomes very lucrative or as a screaming buy. So which is where I think while these announcements look good, but not really enticing enough given the rich valuation.
Right, sir. We also had our report card for non-life insurers. So what did we get there?
So I think non-life, clearly the health insurance is doing very well. So you are seeing clearly double-digit kind of a growth rate for most of the players. What is struggling is the auto bit because auto sales in some pockets have been slower, so which is where the growth rate has come down. So it used to be a good double-digit growth. Now it has come down to a low double-digit kind of a growth rate. And I think what you're clearly seeing is that all the private players are gaining market share and PSUs are sort of losing market share. But sum total, you really do not have much of a triggers in place, except for the fact that we need to see that this month what the government does or the GST Council does in terms of the rate on the health insurance. Otherwise, growth is largely muted. So I don't think this is one space which should be chased as of now. Let's see how things sort of pan out in terms of do they get some GST cut benefits or not.
Right. We also had the news of Biosecure Act being postponed for now. So how do we look at it now? We had earlier discussed Biosecure Act when it was in works, and now it's been postponed again. So does that view change on that at all?
So I think when the bill was passed in the House of Representatives, it got the support of both Republicans and Democrats. So we don't see a major U-turn there. So yes, it is getting postponed because now what you're seeing is that this current government is going into recess and till the new administration takes over. So it is going to take some time. Plus, there are expectation that you will see some modification because earlier bill was naming top Chinese companies. I think that is what is proposed to sort of do away with. So yes, there is some delay, and we have seen companies witnessing a price correction. But the reason for liking the entire CDMO is not entirely because of the US Biosecure Act, because there are a couple of other variables which are at play. One, I think the US biotech funding has definitely improved. The other is that the number two player, Catalent, has been acquired by Novo Nordisk. So they are going to do more of their work, which again means there is a space which is sort of vacated. And I think overall Indian companies have done fairly good amount of capex. So companies what we track, they have done a capex of nearly closer to 9,600 odd crores, and not necessarily with the perspective of a US Biosecure Act. So, which is why, while yes, there has been a sort of a correction, and this could have probably added more upside, but this is something which we had still not factored in. But even without that, I think the outlook for the entire CDMO as a space remains pretty bright.
Absolutely. And finally, coming to the most awaited section, hidden gem of the week, which will it be this time?
So since we continue to like the CDMO space, we've seen that Piramal Pharma correcting by 20%, at least from the top. So from that perspective, I think this correction is a good opportunity to buy with a target price of 280. This is one of the largest CDMO players. Good part is that this is one of the few companies which has got a plant in US. And then I think this company is clearly talking of about 13% kind of a growth irrespective of the US Biosecure Act. And also in addition to that, the margin profile, they are expecting it to be a lot more better at 25%. And I think in the complex hospital generic space, they are looking to do revenues of about $600 million. So they are looking to do a revenue of 13 odd percent. So some total revenues are going to grow at 13% since we are expecting margins to sort of recover. So FY24 was really a sort of a challenging year for them, or 23 also. From a meager profit of about 17 odd crores, we are expecting their profits to actually jump to about 520 odd crores. And which is why we continue to like this company with a target price of 280.
Great. Awesome. Well, that was it for this time. Thank you so much, Pankaj sir, for sharing your expertise with us. And thank you so much, everyone, for watching. We'll be back next week with another app. Thank you so much for watching again.
Investment in securities market are subject to market risk. Read all the related documents carefully before investing.